What to expect from the local market open in under an hour's time now. Cameron Peacock joins us from IG in Melbourne. Cameron, good to see you there. What's your call for the Aussie market open?
Yeah, good morning, Bridie. Look, we're looking at a slightly firmer open for our market today. We're currently calling it up about 7 points, or 0.15%, around that 45.58 level. That small expected gain, of course, building on last week's gains of about 1%. I think the focus of today's trading is certainly going to be Chinese data. Over the weekend, of course, we had that raft of Chinese data out, including fixed asset investment, industrial production, retail sales, CPI. That was all sort of broadly in line or maybe marginally ahead of expectations. So that is certainly going to help support our market. And then I think around midday today we get the latest Chinese trade balance numbers out, where we are expected to see a $26 billion monthly surplus with export-import growth of 9% and 2% respectively. So I think that's certainly going to sort of dictate how our major miners trade into the afternoon. But at this stage, looking at a fairly muted opening with a slight upside bias.
Just looking at what we saw in terms of the US, so we've seen just some commentary coming through from aides to President Barack Obama in the US and the Republican Speaker of the House, John Boehner, saying that they've held a meeting there to discuss efforts to resolve the fiscal cliff at the White House. It was an unannounced meeting, and certainly the results of that saying that it was all about discussing efforts to resolve the fiscal cliff, but they're not reading out details of the conversation, but the lines of communication remain open. What do you think? I mean, will there be a last minute deal reached on this?
Look, I guess that's the million-dollar question. I mean, ever since Obama won the election, the two parties have supposedly been in talks. We saw all of last week press conferences being held, every day, where they were sort of putting the blame on the other party for the lack of progress being made. I think that's frustrating people. I think there is an expectation that a deal of some substance or some sort of deal will get done by year end. Exactly what that is and what sort of tax hikes and spending cuts that comprises, no one really knows. But it is positive to see that they're still talking, and we're going to see this daily political posturing right up until year end.
Just looking at the economic data out of the US, and certainly the jobs data seemed to be a pretty good read. What did you make of it?
Yeah, look, I've always said the US non-farm payrolls report is one of the most nonsense reports in the economic calendar, to be honest. I mean, we had 146,000 jobs as the headline number. On a headline basis, that was well ahead of the 93,000 that the market had expected. But it's a real smoke and mirrors type report, because when you look at it, we saw the previous month's 171,000 jobs being revised back to about 138,000. And of course, the big talking point is the participation rate. I think came in at 63.6%. That's a 30-year low, so it's really masking the true unemployment predicament in the US. So I wouldn't be getting too excited about 146,000 jobs, because at the end of the day, that's absolutely nothing to do with actual jobs created. It's just the outcome from a financial model.
Just turning to our market today, you mentioned there that you're expecting an unwind that's pretty flat, really, just up about 7 points or so. We're only 30 points off the year high, though, in the ASX 200. What do you think? I mean, with a few weeks to go, could we still get there, fiscal cliff notwithstanding?
Yeah, look, I think it's going to be hard to push much higher until we get a fiscal cliff outcome or some signs of a deal. I think it's been a long year. The markets have been, we've consolidated, I guess, in this last week above 4,500. It'd certainly be nice to think we can close above 4,500. But depending on how negotiations play out over the next couple of weeks, I mean, we could end up 150 points higher or 150 points lower. So very difficult to say how things are going to end up on December 31.
But the big events that you'll be watching this week, obviously, we've got in the US, of course, the Fed meeting there and ongoing negotiations over the fiscal cliff as well. But what are sort of the big events for you this week?
Yeah, look, they're probably the two biggest things. I think everyone's going to be watching that Fed meeting quite closely. There's expectations that as Operation Twist runs off, that the Fed are going to announce some new measures to sort of pick up the slack where that program runs off. And then, of course, the fiscal cliff is the be-all and end-all for financial markets. I think really, as I said, since Obama was re-elected, everyone knew that was going to be the main game in financial markets, affecting all asset classes, be it our equities, currencies, commodities, bonds, whatever it might be. Everything is going to be dictated to by how those negotiations play out, because that's really going to set the tone for how we head into the first quarter of next year.
Okay, Cam, thank you so much for that. Cameron Peacock there from